with what I expect the market to do over the next 5 to 10 years, it is highly possible that anyone that's holding for quote unquote appreciation, just the net sum total is going to cost to maintain the property and have your turnover and throw the new roof on and do all these things is going to be more than the actual appreciation on a lot of houses. What's going on, guys? Welcome to today's episode of the Collecting Keys Real Estate Investing Podcast. Today is Wednesday. It's the Off Market Operator Radio Show, and this is the show where we talk about making massive income, not just passive income with your real estate investing business. If this is your first time here, I am Mike DeHaan here with my co-host Dan Austin and Dylan Cook. And on these Wednesday shows, we like to talk about real estate investing, business, and whatever else we feel like for the week. And so we are here going into, I guess at this point, halfway into the first month of Q4. And we were chatting before the show about our rental portfolios. And we all have the same interesting situation of like, if you look at the top line of our rental portfolios, we're all doing pretty dang well. So like Dylan, you said that you have done about $300,000 gross on your rentals. I pulled up Dan and I's numbers, and if you include stuff that Dan and I joint own together and my private ones, about $45,000 a month gross. And yet none of us are actually taking home any money. And like,
you guys
why?
aren't? You guys aren't making money?
Dan's been this cashing or collecting rent at the doorsteps.
Yeah, right.
Yeah, exactly. Cash, baby.
He's been embezzling it. But no, it's this phenomenon though that I don't want to say it's like unique for like right now. I just feel like that a lot of us that have only been in the game for like 5 years, maybe this is our first exposure to it, of you have all this money that comes in, but after mortgages, which everyone understands, right? But the increases in taxes and just maintaining the properties and the actual true expense to, you know, repair all the stuff you're supposed to repair, it's actually really freaking hard to like make actual money with a rental portfolio. And what's the point, I guess? I don't know. Like,
is there a point? There's a point, right?
I think the main difference I would want to get across is if I look at my rental portfolio on like underwriting perspective, like, you know, on paper, taking the ghost expenses off, we should make, I don't know, $8,000-9,000 a month net cash flow. Mm-hmm. Then at the end of the year, you're like, okay, you made $10,000 the entire year. So where the hell did the money go? And a lot of that is CapEx and repairs and this shit that pops up during your length of ownership.
Do you think you could cull the herd, as they say, and like have like a really tight, strong cash flowing portfolio that would get you to like $8,000 a month if you sold off a bunch of shit?
I think going that route would basically be like selling everything, recapturing the equity, and 1031ing into probably like a triple net or like something like a commercial deal that would just be net on net. So you
don't have like the gems, like the stars of your portfolio, and then the dogs that are dragging you down. Because like,
I see what you're saying.
Kind of that. Like we have a dichotomy in our portfolio.
There are two properties, my 2 4 units that are right next to each other that I freaking love. Yeah. They kill it, and there's room to go up on those two by like a lot. Like as far as rent income goes. But so I could guess sell off some of the beaters and just reinvest and pay those off. But
yeah. Well, that is a valid point though, Dan, because I guess if you only took like our handful of really strong properties, it would make money, but they are dragged down by the rest of the ones in the portfolio that do have recurring issues for whatever reason.
Totally right. It's like shit that you can't even freaking guess is going to happen.
Well, the funny thing is too, is it's not even like it's neighborhood related or it's like, it's always the bad tenants. Cause I got one of our best portfolio duplexes in the worst part of town.
Yeah. Our first tenant, Mike, I just got a call. You remember Schmadam that moved in there? Yeah. They're moving out. Like this is a good story. This is how Mike and I are great people. So we buy this duplex. It's our first property we bought together, right? I mean, this is the first property we actually truly bought as an off-market deal.
That also almost sunk us. That almost bought it way too early.
This is the iconic property that almost sunk the Mike and Dan story that never would have been. And we remodeled this thing, beautiful. After the current tenants moved out. And when was that? 2020.
That was 2020.
No point to that story, but I just wanted to bring that up.
Well, I mean, we print money in that property.
We print money on that property. We do.
And, you know, a big part of it is we bought it at such a good discount. We added value to it. You know, its prices have gone up, right? Rents have gone up and everything else. But then we also own things that are in like A-class neighborhoods that on paper look like much better assets, and we just lose our ass on them constantly.
Yeah.
Right.
That's just Murphy's Law too. Sometimes we've had that basement on our beautiful A-class property in the best part of Spokane that's flooded 4 times now, all for different reasons. You would think, okay, it flooded 4 times, fix your problem, dude. No, it's for all different reasons.
It's like stuff you can't even control, and that's an extreme example. But even my own personal rentals, I have 2 that are literally in the best neighborhood in North Spokane. And the problem with those ones is because they are in an A-class area where I have a higher rental rate and I get higher income earning tenants, the churn is significantly higher. I've owned the properties for 6 years and I have had 6 different tenants in each one.
Mm-hmm.
And every time that happens, there's a month of vacancy. There's always shit that needs to be fixed. There's random odds and ends. Plus, those properties have appreciated a ton. So my taxes have increased an ungodly amount. And all of a sudden, I'm not making any money with these things, right? And honestly, I just got lucky where I have huge gains just because I bought them before the market went stupid.
Yeah.
Right.
I will say the caveat to this conversation for me personally is my student rentals are kicking ass right now. And I think I still have room to grow on rents, and I really increased the rents quite a bit on those.
But you also bought those a long time ago. You bought those in 2016 and 18?
Yeah, about then. Yeah. I did.
Did you refinance them all since then?
I have. I refinanced at a 3% rates. What was that, 2 years ago into like 5.5 or 6% rates, which my cash flow kind of dipped a little bit, and because then taxes and everything went up too. And
but like, I'm sure you cashed out a decent amount from those.
Yeah, I cashed out like what was it, like sort of like around close to 300,000 or something like that out of the
that's worth more than the cash flow for how many years, right?
And that's why I did it, because then I was able to make a ton off of that money. But then rents in that market jumped up really quickly, and that is not typical of the Spokane market. So like I like, it's like we're almost like a step function. Like we're always getting a premium as a student rental, but then it kind of flattened out because I think a bunch of people came into the market to be landlords and then finally realized, oh, this is not making money. So then we stepped up another like $500 a month, which is huge for my cash flow. However, I know enough to know that I don't get to spend that cash flow because there is a looming CapEx, definitely on one of them, at least 1 or 2 CapEx items that are going to kill me, in the next 5 years at some point.
So 2 things. One is, 80% of my calls are plumbing related or water related, I should say. Yeah. So if you're a new investor, update the plumbing. I don't care if it costs more. Always do that. Yeah. Second thing is, I guess the question is, okay, like Mike was getting to this, selling his, or do you have enough room to cash out, refinance, still be cash flow positive? And now that money that you're bringing in from that's tax free. You're not even, that's tax free money.
Totally.
Yes.
But then the problem is like, how much cash are you giving up? Because your cash flow is ultimately your insurance on these things. You would actually have to spend that money to fix things up. Because the only reason that our rentals aren't a big loss and are just like basically a break even for the year is because we have that cash flow. Right.
Yes.
And so we could do another cash out refinance on some of these and get a higher interest rate and have no cash flow, especially because there are lenders right now that are advertising they'll do a less than 1 that's a DSCR,
which is crazy to me. But
I mean, it's just what they're willing to do, I guess. But then like you're gonna literally be losing on that, and one of the things too that,
which is scary, by the way,
it is scary that they want to do that.
Good to do.
No. But one of the things that does make me kind of wonder about I would say the like middle-ish term, I would say long term, but like middle-ish term value of rental properties is I do really think that just with what I expect the market to do over the next 5 to 10 years, that it is highly possible that anyone that's holding for quote unquote appreciation, just the net sum total is going to cost to maintain the property and have your turnover and throw the new roof on in 10 years and do all these things is going to be more than the actual appreciation on a lot of houses. Like, if you think about it, right? If you have a $300,000 house right now that's going to grow 10% over the next 5 years, it's going to increase by 30 grand. There's a pretty good chance that you're going to have to spend $30,000 just to keep that property not shitty over those 5 years, right? It's only $6 grand a year for each one. And if you have like one major item that comes up, which if you live anywhere with weather and you have
Florida,
like you have tenant turnover, that's going to happen, right? I have to replace the HVAC, the air conditioning, the roof, whatever it is, throw some new paint on the outside. Each of those items will cost $6,000 or more.
Yeah, things aren't cheap.
Yeah. So I don't know.
But for the forever investor, I guess they could refinance, take out their 50 grand, the refinance, do those capex items so they get another 5 to 10 years and just have their money parked in real estate. But that's going back to an opportunity cost. Like, or could you just take that money and reinvest it at a higher return somewhere else?
You could. I would say for the forever investor, all they're doing is they are taking their future problems and they're ignoring them. So they can do whatever they want to do right
the
now.
caveat being to that, I guess, would be is like you want to diversify your capital, right? So if you're just chasing ROI, you're never going to really truly diversify unless you're actually like diversifying your ROI, right? Because like if I should have been invested in Bitcoin, like old Dill Pill over here, like
Yeah, but how many are like even GoBundance guys? How many of like most of the people who are in that group, 80% plus are probably real in there because of real estate.
They got
and they're one trick ponies though.
Yeah, they are one.
Yeah, they like not many of them have any kind of traditional, stock portfolios, crypto portfolios, whatever it may be. They're just like, I'm real estate and that's it.
Yeah. Which I don't think is a great idea at all.
No, I don't think so either.
Over the long, I mean, you always look back and be like, "Wow, I'm glad I own this asset," but you might have been more glad to own a different asset when you're talking to your buddy who bought something else at that over that same time period that had a much higher ROI.
Totally. So if I'm looking at like residential real estate, I think that the way, if you're like a serious investor slash, real estate entrepreneur, or you're someone that like wants to figure out the max value for your money, what the play really should be is you buy it at a heavy discount on day one and you create some value, so you can like refinance out as much of your money as you can. You keep it as a rental property for the lifetime of the renovation that you did, right? Which will probably be relatively short since you probably did a cheaper renovation like most landlords do. And then once you get to like that 4 to 7 year standpoint, you look to sell them and pass it on to the next guy, because then it can become their problem. They can become their value add opportunity, right?
Yeah.
And then you can realize your gains, cash out on that equity that you forged when you bought at that discount and move it on to something else. You get a better return.
Are you in that theoretical situation? Are you 1031ing those proceeds into something else? Or are you just paying the taxes and trying to redeploy that capital somewhere else?
I think that depends. I mean, like this is something from my accountant when I tried to 1031 last year and I was about to buy a deal that was super mediocre. And I'm really glad that I didn't in hindsight. And my accountant was like, "Hey dude," I was like, "I honestly recommend instead of buying that deal, just pay the taxes." He's like, "I can't tell you how many investors I've worked with that have bought a shitty deal with doing 1031, trying to not pay taxes and end up losing more money."
Yeah, then they would have saved just from paying the freaking taxes.
Yeah.
Totally. Yeah.
And what people don't realize too, if you 1031 a small property and you keep doing that final property, I don't care how much equity you have, you have so much tax like buildup there that you're going to be upside down.
You basically have to die so your kids don't pay the tax.
Yes.
I mean, that's the play at that point in time. Like you don't personally necessarily get any benefit off of that. That's the whole 1031 till you die kind of concept, I guess.
Totally. Well, also too, I think something that people tend to ignore when they do 1031s is what the actual cost is.
The
to
transactional
transact real
cost
estate on both sides.
So
like when I went and I was going to do my 1031, once I got into all the costs to sell the properties that I sold and buy the properties I was going to buy with the loan costs and all the other just like bullshit that was involved in it, it ultimately came around to the point that I was going to be like only saving like 12 grand, right?
Yeah. It's
versus if I just paid the taxes, it was like a 60. Yeah, it was like $60,000 in taxes I was trying to avoid. And instead I was going to be not really saving that much at all. And so I was like,
60 grand taxes sounds terrible, but when you get down to it, it's not that bad. Once you have all the sales costs, all the buying costs, the risk of buying a shitty deal, all the 1031 costs, because it's not free to do a 1031 exchange. Yeah. You know what I mean? And the headache of doing it.
That's what I'm trying to figure. I did 1031 one of my single families into my 13 unit. I'm trying to look up real quick what it costs to do it. I think it was a couple, I don't know. There's a couple grand, I think.
The actual 1031 itself isn't that bad. It's when you get into like the loan cost and everything else, but if you're getting a DSCR loan and then you're doing the inspection.
Oh yeah. I see what you're saying. They charge 2 points, just origination fees, just to do the freaking loan.
Yeah, exactly.
Just dumb stuff. So anyways, I don't know. It's just, I think that the big lesson, I did a whole episode on my YouTube and a previous Friday Focus around this, around like how I'm planning to sell my rentals. I think, there's no right or wrong answer. Just make sure that you actually know what your returns are. you know, and
Mhm.
and other people are talking about this too. Like it's funny. I was saying to Dylan before we hopped on, Brandon Turner did a post on his Instagram. It's like yesterday, talking about how you never really get real cash flow on residential rental properties because, you know, if you're doing $300 a month, there's eventually going to be a $3,000 thing you're going to have to pay for.
Mm-hmm.
And the thing that was so funny to me was his post is 100% accurate. He was getting shredded by people in the comments that are like, well, then why did you spend a decade telling people to buy properties then? It's like, well, because 2024 is very different than 2014 when he started
Yeah.
making real estate
And totally. And when he only needed $3,000 a month in cash flow to survive, that was probably fine, right? Like
exactly.
when your mindset changes too, and it's just the reality of the situation. Like buying real estate for long term rental properties is always an option, but you really have to know why you're doing it. Like, what is your ultimate goal? Because if you're listening to the people, make sure you know who you're listening to that are saying go buy rental properties. Like, why are they saying that? And does that actually apply to you? And what are they actually getting out of that? Because I mean, we all started here buying rental properties, and Dylan, you're still buying rental properties. I don't think Mike and I have bought. Have we bought a buy and hold recently, like last year or two? I don't think we have. We sold more than we've purchased for sure. And I think you have to understand what you're shooting for, what you're going for, and if you want a diversified place to put some money, I think real estate's still a great place. You do get the tax benefits or some other great things, some leverage and all that stuff. But like if you're thinking cash flow is your play or it's going to take over some shit, that's not at all the right thing to do.
Yeah. And the last thing I probably want to say on this is there's gurus out there and people who I guess we know probably a little bit personally that who are trying to sell you a turnkey deal or trying to sell you a deal. Mm-hmm. They'll include like that depreciation and the principal pay down in their ROI metrics. And just know that's not how you should calculate that. Your ROI is going to be much lower with those two pieces of information in the input side of that equation.
Exactly.
Totally. Well, and I think the reason people get into rental properties though is typically because they're, you know, some kind of white collar employee that feels like if they buy all these assets, they're not going to have to work as hard. But a lot of us know as you get into this game, I mean, it's significantly more work than you ever expected when you got into it. The problem is you see all these, you know, dorks on Instagram or whatever who talk about how they used their rental properties to like retire and move to Dubai, which
sounds incredibly hard to do. I don't know that you can do that. Dubai has like one of the highest like annual incomes of any country in the world.
No, so there's this whole thing right now that I am certain we're going in a whole different direction.
Sorry to distract us.
But no, so with the Dubai thing, I am convinced that the leaders, kings, whatever of Dubai are currently
United Arab Emirates. Yeah, there's several Emirates. Did you know that?
But Dubai specifically, whichever one.
No, I know.
Whichever one's in there. I'm pretty sure that they have hired influencers to talk about like their new lives that they are making in Dubai try and get people to move there. Because there's so many like random like C and D list fucking influencers that are like all of a sudden like moving there and are just posting about it constantly. And I'm like, okay, guys, really? Just like one day you were like, man, what if I could have slaves and hit women and not go to jail? Like, it doesn't make any sense.
Or you're just a really attractive woman wearing like 10% clothing. That's the only other piece that's over there.
Well, because they're bought, dude, to be there. Like, they're there to hang out.
Well, it's like all this stuff that the Middle East is paying for, right? Like even Saudi Arabia is in this game, right? They're buying Live Golf, all this sort of stuff, all the sports. Like they're really trying to pump it up, dude.
And now they're buying the like real estate influencers to go and move there. You know who I saw recently, which is so random, was what's his name?
Nick Sanitastio.
Yeah, the one that Steve brought out to the meetup that we did.
Don't say anything bad about him, Mike.
Hey, he was a super nice guy, right?
He
has a little thing. If you guys can go look him up, but he like recently moved there, and he has like this whole thing, and he's just constantly posting about his new life.
I guarantee he's getting paid to do that.
Absolutely. He's 100% the guy that would get bought to go and do that because all of a sudden his speeches are less impactful because he no longer works with Tony Robbins.
I mean, let's be honest. Like Dubai's got some cool shit, but it's not America. It's not America.
Yeah, did they control the weather or some shit?
They try to because they have to because it's too hot there. Like nobody's willingly moving from America that has like a good established life in America to Dubai full time.
Based
on save on them tax. You got to save on my taxes, dog. I got to shut up, dude. Like whatever.
So, but anyway, like I don't know. Going back to the rental property thing, though, I think people get into that because they have this illusion that if they get into real estate, they're not going to have to work as hard. They're going to be able to spend more time with their kids and all that sort of stuff, which can absolutely be true. But that's after you get rich. It's not during like the grind phase when you get your $5,000 a month cash flow, which is what everyone says their goal is when they come and they join Scale. And then all of a sudden they get to that and they're like, oh shit, I'm actually still poor because it's not as much money as I thought it was going to be.
Yeah. It's not not enough money. And if you don't have reserves, like you're screwed. If anything we just talked about the past 30 minutes comes up.
Yeah,
I know.
Yep.
So yeah, I don't know. It's just, it's a weird thing. I mean, I think that now more than ever, it's important that if you want any level of success is you have to approach your finances like a business owner, right? And from like a mature level, just the level of financial intelligence out there is so much higher and you're competing with all those people.
Mm-hmm.
Yes.
Right?
Yep. Say going back to the point though we were making earlier is like, and realize it's gonna be a lot of hard work. Like there's a lot of people that started their own brick and mortar businesses and they'll tell you, you know, and maybe they're 67 years old now and all the hard work and the sleepless nights that they had, it's not really that any different just because a Instagram influencer got you to sign up for you know, wholesaling and off market real estate. Like it's freaking hard work. And I think people underestimate the amount of hard work it takes.
Yeah. There are things in life that, for example, pharmacy school is a good example of this. If halfway through, if I would have known how hard it was, I don't know if I would have signed up at the beginning. Honestly, starting this wholesale like business is like similar to that.
Right.
Because you don't know how much energy and time it is actually needed to start this thing. Once you're established, it's a little bit better. You're like, man, I'm proud of myself. I'm glad I did that. But it's freaking hard.
Oh yeah. I mean, it's funny. Especially a couple years ago when we were first starting to make the podcast and stuff, people would always ask like how we grew so quickly. And the honest truth, which sounds like such a baby boomer answer, is we worked for 12 to 14 hours a day, pretty much every single day for like 3 years.
Yeah.
And then it finally came together. Like, I can't tell you how many conversations Dan and I have had via Slack at like 9:30 p.m. on a fucking Saturday.
Yeah.
Yep.
Right. Yep. Like that's just part of the game.
Yeah. Yep. And if you got to like the game a little bit, right? You can't just like think you want to show up and you want this like lifestyle business where you can sit at a computer and just make money. That's not how it works. you know?
Yeah. You know, if you want that, go and find the next MLM and try to be at the top and you can build your downline and then you can just con a bunch of people into paying your bills.
Did I ever tell you guys, one of the very first meetups I went to, this would have been like 2017, 2018. I was talking to an older guy there simply because like, oh, he's old. He probably owns a bunch of properties. And he's like, oh, I've been coming to this thing for like 20 years. So like, oh, how much do you own? He's like, oh, I'm still waiting for the first one.
Oh,
and I'm just like, and I was like, okay, never thought like, no. And I don't know if he blamed his wife or something. I'm like, oh my God, like how much information do you think you actually need before you actually just pull the freaking trigger?
No shit. If
anything he would have bought 20 years ago would have been worth quadruple the amount.
Yes. Oh my gosh. Yeah.
That's funny. I remember the first meetup I ever went to here. It was run by a guy named Chris McIntosh.
Oh, remember old Chris?
Oh yeah, dude. Literal criminal. You can go and give him a Google. But basically his entire thing was him pitching newbies into giving him money to do deals, and then he would just not actually do the deal and just steal their money.
Yeah. And that was like even back then though, like there was still some of that like creepy guru shit going on in like meetups. I think Bigger Pockets actually did a good job of turning the tide on that by like having people start their own Bigger Pockets type meetups. It just changed that. But yeah, before it was like, well, let me go pay this guru, give him my credit card and he'll figure it out. And like that dude was doing like one-on-one coaching like in his house, like in the evenings. Is like, this is getting real weird.
Yeah. There's a guy in Cleveland who I guess would do the same thing, but he had like 19 deeds to one property or something. Like he tried to secure 19 mortgages against one property.
Yeah.
I've heard
I remember reading about this. Was like somewhat recent, like in the
past it was. Yeah, but but then he has Instagram at courtside seats at like NBA games.
Oh,
I forget his name. I'll have to look it up. But
I remember that. I did like a whole like little Instagram series on
it was
that
just
guy.
stealing people's money.
Yeah, back in 22 when the things first started to get weird, I was like obsessed with a lot of these scams that people were doing because they like were all coming out of the woodwork.
Mike's like, how do I do this?
The
Google how to get 19 deeds on properties.
No, the thing that it was always fascinating to me about a lot of these was there's always the ones that you're like, oh shit, I didn't know that guy was a crook.
Yeah.
Like, especially in Go Abundance, there was a few guys that came out that had been robbing people for like a decade.
Yeah.
But then also too, there was so many other ones that I was like, I can't believe people believed this person. Right. It was like my reality TV, dude. It was like my, real estate Kardashians where I'd be like, someone gave this person $70,000.
Gross.
But yeah, I mean, I don't know. There was some that were getting out of hand crazy, and that like ultimately it just came down to the old sort of adage, right? That if something feels too good to be true, it probably
It
is.
definitely is.
And everyone's heard that. Everyone knows that. But for some reason,
You get sucked in, man.
people get sucked in. Yeah. I don't know what it is.
Well,
but yeah. Did you find him, Dylan?
I tried. Now, Steven Dettelbeck is the guy listed on this one, but this is from 2011, so this can't be right.
Well, so the guy, he was like a DJ or something, and that's why it like blew up, was because he was using these different influencers and like the local like radio and stuff to bring in all.
You know, it's funny. It's like we talk about Hormozy on this podcast, and I connecting the dots. I've heard Hormozy talk about him investing money with a guy from like a Cleveland house, and I wonder if it's the same dude. And he said he lost like 50 grand.
Yeah.
Well, Alex Hormozy is dumb for believing in him.
Well, I wouldn't go that far.
He's the first person to say that though too. He's like, I didn't know what I was doing.
Yeah.
And that turned into his whole pitch. Like, I'm only going to invest what I know.
Yeah.
You know what I know, which is private equity businesses now.
There's that one episode he talks about that specifically, and he has this line which I really resonate with, and I feel like it's lost in the real estate world. He's like, and then I found out after I'd owned it for a month that apparently the tenants didn't have electricity or running water, and so I spent $30,000 to add that because of course they fucking should have running water.
Yeah.
I'm like, seriously.
I mean, it's optional.
Yeah.
Well, cool. Well, I mean, we just talked about rentals for a while. I have a deal under contract that has like basically like 3 different exit strategies. One, I could keep them. Or I could probably assign it, double close it, make like 20, 25, or take it down, put like 20, 25 into it, and probably make around 75K. So with that as like the top line, you know, I don't know, scenario, what would you guys do with that?
I would take that one down.
I
mean, with those numbers. So this is like our new criteria, I guess, that we've put into our stuff, and since we've been working with Cody here in Spokane and starting to ramp up local, has been that if we can make 3 times what we can on a wholesale fee, and it'll cost like less than $40,000 to renovate it, then we'll do it.
Yeah, given
interesting with the 40,000.
Yeah, that's like what we would,
because that's not a lot. I feel like where you're at. That's like very cosmetic.
It's like a good cosmetic, like a good solid cosmetic. Maybe you have to replace cabinets.
Yeah,
you know,
I would say it's like a cosmetic
crazy.
with like one large CapEx item.
Yeah. And that's because like you don't want to get tied up in these properties. And I think the whole idea though is like, does it stress you to do that? And I know you, Dylan, I know like your situation, like you can handle this. And so, yeah, like I would do that all day long because that's a huge spread for the little bit of money. I'm guessing maybe out of pocket with acquisition costs, would you be like 40, 50,000 tops?
Probably like 40-ish grand. Yeah.
So 40 out of pocket to make 75 and say under 6 months, like, yeah, let's go all day long.
Yeah. And tying this back to the previous conversation, I first looked at these as rentals because they're not in a bad part of town. And the cash on cash, you know, on paper is 35% with conservative numbers, but taking that and, you know, can you redeploy that money? Well, my return on ad spend's like 800%. So
that's pretty good.
Weighing those 2 options, one requires more work than the other.
Yeah,
but that's a big enough delta, in my opinion, to go for the
3x the payoff.
Yeah,
exactly.
I would think so. I mean, now if your option was you could wholesale it for 40 or make 75, I would just wholesale it.
Yeah, true.
So now,
true, and I'm not really marketing it very hard either, so I probably could maybe do that first. Try to get in there, do that.
So yeah, what are our flippers in your market willing to do things for 30 grand, 35 grand profit?
Yeah.
Oh yeah. Yeah, you got a buyer out there somewhere.
Yeah,
You just got to find them. Yeah, the other, I guess maybe a different line of questioning too, given you're not Dylan and you're not a stud and you haven't been super experienced in this game. Say you're like lucky to wholesale 1 deal a month. Like you're like, hell yeah, I got a good wholesale deal this month. I'm hoping for my one next month. You've been doing that for a year. You're not super like capital heavy. Like you don't got a ton of cash, but you know, you're able to survive. Do you do a 25K wholesale fee on this one? Or do you do something?
I mean, my answer there is definitely yes. I feel like if you're doing 1 a month, your immediate next thing should try to get to 2 to 3 and ignore pretty much everything else.
Yeah, I agree. And you're gonna be able to do that with the quicker cash, than trying to get like the larger cash.
I feel like that's like advice that's highly overlooked because when you are that guy that's doing 1 deal a month and you're like hoping that you get 1 deal every month, but it's been consistent, you just don't believe in yourself, and you see 75K looking at you, it's hard to say no to that.
Yeah,
it's hard
totally.
to say no. With that 75K, you got to remember it could be 60K with some bumps. You know what I mean?
Yep.
And it could be 6 months, it could be 7 months. You're hoping it's 4. And so there's so many variables associated with that. When you're not doing volume, it's really hard for me to say to take down a flip because you need
when you're not doing volume, especially unless it's like super clean.
Right.
One thing let me bring up Ari Simply. This has been in the CRM since August of 2023. And we were under contract to buy these. And out of all the objections, this one was he couldn't get his wife to sign because Ohio's a dower state. So even if it's like, then it's in his personal name. So like she has to sign away her dower rights. And that blew up the deal for a while. And so we actually put in a first right of refusal on these. And he was agreeable to that. And we're finally turning back around a year later.
Did you have to pay for that first right of refusal, or did you just get him to sign it?
I paid the attorney to file it, but that was it.
Oh, you didn't? Okay. Oh, because you were probably were you under contract then?
I was under contract, yeah, already.
So you kind of had some leverage there.
Exactly. Yeah. And the guy, the seller was actually really cool about it. He's like, dude, this is like the last thing I anticipated to hold up this deal.
Yeah.
And so that was our solution at the time. I almost had written it off, and then he called me the other day, and I'm like, cool.
That's so awesome, dude.
Yeah, and because the prices have appreciated, since then, since we've done it. Yeah.
Yep. Yeah, we had one of those a while back too, where when the guy first called us, he wanted $300,000. It was like 2020, and we're like, no way in hell we could do that. Mm-hmm. And then our lead manager followed up with him in like 2022, and he's like, yeah, I remember you guys, like, my number, it's 300,000. And we were like, I think we could do that now.
We made a good fee on that one.
I think we made like 40 on it. Yeah.
Yeah, it was a good fee. The market had taken off, and then of course we were more seasoned, different buyers.
Yeah.
Right. So I guess if you are, a newbie and you have those in your warm leads or whatever section, they're a couple of years old, and they're, maybe redo the comps on some of your places, because, these might be deals now that the seller just doesn't realize.
Hugely important thing to do.
Yeah. I mean, it's also why I'm a big proponent of not pushing leads to dead in your system unless you have like a really legitimate reason to do so, especially if you're doing targeted marketing, like you're hitting out to people that have bankruptcies and liens and things like that. Really, unless the property sells or they are just so unbelievably hostile that you can't have a conversation, you should follow up with them at least like quarterly or every 6 months, because you just never know.
You put them as a lead for a reason. At some point in time, whether you had a good conversation with them, whether they called you, I mean, they were a lead at some point in time, and you probably paid $50, $100, $200-$300 for that lead. So don't throw it away.
And a common scenario is, let's say, someone's on a distress list somewhere. They're getting contacted by other wholesalers and investors the whole time. And they're like, I want 200,000. And every offer they get in is somewhere between like 120 and 150. And after a while, they're like, shit, maybe this is actually worth, 150. And if you're just at the right place at the right time, you're going to get that deal.
Absolutely. Yep. Yeah. I mean, that's literally the whole business, right? The whole industry is having these people that you bet are going to need to sell at a discount at some point, and you just happen to be one that is directly in front of them when they decide to make that decision. Because it's not like a hard sales kind of business where you can like convince someone to buy your widget. They have to go through that decision themselves. It's probably the largest decision / transaction they're going to do in their entire life. And you just have to be one that's there when they decide that it finally makes sense for them.
And top of mind. So that way, do the follow-ups, send the mail consistently.
Yep.
There's not much to it. I like speaking freely.
Yep.
Dude, like honestly, one of the most challenging things that I really have with this industry right now, and especially with like our scale community and different stuff, is I talk to people, and there's so much money to be made if you're willing to lie and convince people that there's like some super big secret, or it's like a really complex thing that only you know the answer to.
Oh yeah. Proprietary wholesaling software. That's
exactly
a good one.
Some bullshit. Yeah. When in reality, when I'm just like, hey, look, this business is actually really simple. We just kind of, go over how we do stuff correctly and how we do it in a way that's super easy to scale, because it just means doing more and adding in a couple more team members. People are like, nah, this guy's full of shit. There's no way it's that fucking easy.
Liar. That can't work. It can't work that way. Like, come on, guys.
Literally, though,
it is simple. It's so easy.
I mean, we literally have like 3 softwares and a small team and some VAs. And that's it. We have a CRM, a data software, and an e-sign software, and that's our entire business.
I bet you we could come with like a new logan. Like, it's so easy, even a caveman could do it.
Ooh, there you go. Yeah, then we could
see if that's still trademarked there, Dan.
Yeah.
Yeah. There's that, and then we could call it like, house vestors or something.
Yeah.
Yeah, we can have maybe trademark. We buy ugly properties. How about that?
Let's
Yeah.
do it. I like this business plan. Let's go.
I think so. Yeah, we got legs on it for sure. But, cool. All right, guys. Anything else to wrap up?
Nope.
No, I think that's it for me for this week.
Cool. Right on, guys. Well, thanks for listening, everybody. Should share this with your friends who are into real estate business or are trying to figure out what to do with their money. Because we all have those rich friends who, for some reason, have way more money than you and they make stupid investment decisions. Mm-hmm. Tell them to not pour it into stupid rental properties where they're not going to make anything just because they don't want to work, because that's a bad strategy. So hopefully you can share this with them and convince them to not throw their money away. But anyways, guys, thanks for listening, and we'll talk to you guys next week.
See ya.